The ad revenues for Chinese internet giants like Tencent and Alibaba are starting to suffer as business confidence is waning in China. And that tells me that the CCP needs to make some big moves right now to support the economy. That's what we're going to cover in this video. So guys, smash that like button and subscribe if you're new. You're watching More Money. Let's get it. What's up guys, and welcome back to the channel where the goal here is to help at least 1,000 people achieve financial independence much sooner. And let's dive right into this one so you can see here. The Wall Street Journal reported that Chinese internet giants' ad revenues is starting to suffer because business confidence is waning. And some firms are suggesting that it could be a long time before a recovery takes hold as COVID containment measures continue. And the other thing that the article didn't mention is that this is just COVID containment measures right now with the COVID numbers on the decline. What happens in a situation where you have an increase in the number of COVID infections once again? Are we going to go into subsequent lockdowns? So there's a lot of risk here with a Chinese reopening, and it's very likely that at some point between now and the end of 2022, they could enter into another lockdown. I didn't expect them to be going into subsequent lockdowns, but the zero COVID policy has forced them to do just that even in 2022. And the article dives deeper that companies in China are cutting back on digital ad spending as the economy slows and recurring COVID-19 outbreaks weigh on consumption, which is another sign of waning business confidence in the world's most populous nation. And here's the issue, that the Chinese internet giants have warned already of weak ad spending by their customers in the second quarter. And what they're really doing is they're signaling pessimism about the broader economic outlook. And so overall, they're suggesting that business in China spent about 20% less on all forms of advertising versus the same month a year ago. And that's really telling because as the year goes on, you would think that spending increases, especially now that we're entering a new quarter. You would think that that would be the case. But if spending is declining by 20% month over month, then what does the rest of the year have to say? Now, I don't want to be completely pessimistic. I know that you guys don't like when I'm pessimistic. Although I'm an owner of Alibaba, I'm an investor in Chinese companies, I do try to take as much of a balanced approach as possible. And so I do want to provide a little bit of a glimmer of hope here. You can see here that at the bottom here in the final paragraph, growth in advertising spending is still expected. So Goldman Sachs equity research team expects growth in overall online advertising revenue in the country to slow to 8% in 2022 from more than 25% in each of the last 2 years. So at least we're still expecting growth. And then from this chart, you can see that although growth is expected to decline to around 8% in 2022, you can see that it's expected to go right back into the double digits for 2023 and 2024 and stay in that low double-digit territory into 2025. And moving further into the article, you can see that Goldman really cited that the COVID situation and the impact of supply chain disruptions are the main reasons why sort of consumption is being hurt. And so COVID is hurting consumption, which is unhelpful, but it's also hurting logistics, which is more unhelpful. And that was actually something said by James Mitchell, Tencent. Now, Tencent's online advertising revenue already fell by 18% year over year in the first quarter. So this is expected to be just additional pain. Baidu is also saying that their advertising business is suffering right now. Now, here's the other thing. Things aren't rosy in the US as it relates to ad spending either. You can see here at the bottom of this exhibit, some Western internet giants such as Snap, Alphabet, and Meta are also contending with the slowdown of online advertising as high inflation snaps US consumer spending. So effectively what they're saying is that the combination of high inflation and now rising rates in the US, which is slowing consumer demand, has been reducing advertising spend on their platforms. What do you think a slowing US consumer is expected to do for a Chinese economy? It's obviously going to slow it down even further. So now you have an additional risk that I've been calling out on this channel for a while. And now we're seeing more and more of the media start talking about this, which is very important because, of course, we have a globally connected economy. The US slows, China's absolutely going to slow as a result of it. And you can already start seeing that happen. Unemployment in China is at its highest level in years, and the country's property market is in the midst of a deep downturn. These are major dampeners on consumer confidence that weren't present just 2 years ago. And here's the thing, real estate developers and after-school tutoring companies also used to be huge advertisers, and much of their spend on ads has effectively evaporated. And both of these issues are as a result of CCP measures, albeit I would admit that going after the real estate bubble or trying to contain it now was probably a good move, even though it potentially causes a lot of pain in the short term. Now, with that said, I always say on this channel, I've been saying since day one, diversification is very important. China has a lot of opportunities, but personally, my Chinese portfolio is not more than 20% of my overall portfolio. And I think Alibaba is not more than 10%. So just keep that in mind. But taking a look at the tracker that the Patreons get access to, you can see that there's 11 companies that are now under 50% of their intrinsic value. And so you see Alibaba there, but close behind Alibaba is Zillow Group. Now, obviously, Zillow Group is cheaper because there's a housing issue in the US, but I think Zillow Group is a best of breed in its industry, and over the life of this company, it's going to generate way more cash flow for its owners than the market is giving credit for it. And so I believe that it's trading at approximately 39% of its intrinsic value. And there's a whole slew of other names in there that you can get access to at the $5 tier level. And so let me repeat that once again. If you want access to the tracker, you can get access to that tracker at the lower tier of the Patreon. And once again, like I always say, if you try it out and it's not for you, no problem. Just let me know in the Patreon before you cancel and tell me that you tried it and it wasn't for you. No problem at all. I'll completely refund your first month's subscription so that you take no financial risk at all. At the end of the day, that's how much I believe in this product. Now, there's additional news that's actually challenging for Alibaba investors. The CCP has recently started cracking down on cloud computing, and you can actually get to the video where I describe this whole situation right here.